Hello everyone, good morning. Today we are going to see the topic stock exchange. In the previous sessions, we had been dealing about what capital market is all about, the two types we have seen, secondary and the primary. Now, we are going to deal something, a part of an important segment of secondary market, that is stock exchange. So in this particular session, we'll be dealing with what is stock exchange all about, then its important features, functions, services to society in different manner, and various defects. So let us get into the topic. So first of all, let me ask you, what do you mean by stock exchange? What is stock exchange? It's a secure place where trading is done in a systematic manner. Here, we can find that the securities are bought and sold as per the structured rules and regulations laid down by SEBI. Because you can find that in the primary market, new issue of shares are happening. So whatever the shares are listed in the market, it gets traded again and again in an important marketplace which is known to be stock market or stock exchange. Securities mentioned here can be of different types. It can be debentures or shares issued by the public company, or it can be bonds and debentures, bonds belonging to the government companies, or the debentures related to the private companies, okay, or municipal bodies and public bodies. So these can be different examples. Now, let us define the concept of stock exchange. Important question. So according to Securities Contract Regulations Act 1956, the term stock exchange is defined as an association or organization or body of individuals, whether incorporated or not established for the purpose of assisting, regulating, and controlling the business in buying, selling, and dealing in securities. So altogether, we can say that it's an association, it is an organization, or it's a body, institution, we can say, where you can find all the things that decided whatever the things are happening regarding the buying, selling, trading, all these things are dealt over here. So this is what called stock exchange all about. Let us see the important features of stock exchange. First of all, it's a centralized marketplace. We have different interconnections between various stock exchanges in India, where we can say that stock exchange, the major headquarters, we can say is at Mumbai. How are we be able to say this? Because we can find the majority of the transactions are happening in the business location at Mumbai. Also, we know that the SEBI, which is a capital market regulator, is also situated in Mumbai. So whatever transactions are happening at different places, though we have different sorts of stock exchanges in India, but the major functioning is all done centralized. The second one is a theater for trading securities. Here we can find the securities which I told just now, bonds, debentures, shares, equity shares, whatever it is. All these are being traded in the stock market. Next, assisting to buy and sell the securities. Whoever wants to buy or sell or hold their securities will be assisted as regulated by SEBI. Auction market. What is auction? Auction is nothing but you buy it from one place and you try to sell it at higher rate. You try to bid it. The highest bidder will be getting that offer. So this is really happening for speculative gains in stock market. Further, we have it has its own rules and regulations which has been laid down by SEBI. It has government patronage and control. It has facility for genuine speculation. It is governed by a recognized stock code of conduct. It maintains an official list of securities, which are the securities which are highly leading, which is called the growing shares or the blue chip shares, we say. The blue chip shares are those shares which are showing prosperity and which always move in the forward direction in the stock market. And such companies, the shares of such companies are called to be blue chip companies. It maintains an official list of securities. It is also a market for second-hand securities. Also, finally, we can say it allows dealings only in listed securities. Unlisted securities are not considered over here. Next, let us go into the economic functions of stock exchange. Important question. Here the question comes. Stock exchange helps or it is an economic barometer. It is a barometer for economic development. How can you say this? Explain in your own words. So these are the important functions to be remembered. The first is it ensures liquidity to capital. What is ensuring liquidity? Liquidity is actually marketability or the transferability or the convertibility of the assets into cash. What is the use of that? It helps in maintaining adequate cash balance to meet out the uncertain future for any companies in the coming generation. So such liquidity will pump in more of capital, which can really help in mobilizing the capital and increasing the savings habits of this company or the firm. Next, we have is continuous market for the securities. We have different financial securities being traded in the stock exchanges. Obviously, there is a continuity we can find. Day by day, the transactions are happening. Capital formation, as I told you, when there is more of liquidity, we can find there is more of capital formation happening too. Mobilization of savings, ensuring liquidity and leading to capital formation can automatically lead to the mobilization of savings. Evaluation and securities. Evaluation of securities means since we have different forms of securities, be it high risk, moderate risk, or low risk, it can be evaluated. The investors could themselves evaluate which security would be favorable for them, which security would give them more return. Based on that, they can take investment decision making. Further, it's a platform for public debts. It's also we can find that there is more of pricing of securities can happen. Then diversified investments. So you have different opportunities for investments. Today, we are moving towards hybrid investment. What is hybrid? We use a combination of different securities, different portfolios are created. And what is the benefit of that? The return of one asset can compensate the risk of the other. So obviously, we can find there is a benefit through when we combine the securities. Then we have making the public aware of the equity investments, making them aware, making them educated about the risk and the loss aspects of the equity investments. Not to demotivate them, but to make them move in the right direction. Transactional safety, helpful to the banks too, because it helps in improving the credit policies. Then pumping in more of interest rates. Then it also helps in trying to maintain the liquidity in the banks. Then we can say it's a barometer for economic growth and development. Finally, it helps in safeguarding the investors too. Now let us see the services of stock exchanges. Services can be classified or bifurcated into three types. One is services to community, second is services to investors, and services to companies. Let us see services to companies first. It enhances credibility. Better relationship can be enhanced. Because whenever you find the companies getting better, automatically it's listed in the stock exchange, be it in the Bombay Stock Exchange or in the National Stock Exchange, NSE or BSE. So what happens? There is a credibility. There is an important synergy factor playing a vital role where the contribution of stock exchanges made towards the companies. Sensing market responses. The investors will have to wait and watch what is happening. The company, whatever the things are happening, the company will benefit out of it. The stock exchange will keep the companies updated about the new changes happening in society. And accordingly, the company would take effort to improve their sales and profit. Distribute securities in wider geographical area. Fix higher prices for securities through listing. These are the factors or the services towards companies. Let us see the services towards community. Helps in capital formation, provides information to people living in different parts of the country, stabilizes the prices of securities, widens the market for securities, channeling the savings to profitable and productive enterprises, and further, it helps in promoting the economic development. Then we have services to investors, ready market for purchases and sales of securities, assessing the value of investments from time to time, then selecting the securities that they could invest their funds most profitably. Then we have there is making rigid list provisions to prevent the companies from intruding the shareholders' rights. So that means that they try to make the procedures more complex or rigid so that the shareholders' rights and interests are not exploited. Next, let us see the factors governing the prices in stock exchanges. So when we say that in the stock exchange, the prices are going up and suddenly going down. Why is this happening? This is called volatility. The frequent fluctuations, that is called volatility. So why do you think there is a price volatility? So these are the reasons for that. It can be because of internal factors or the external factors. So internal factors can be that is within the organization, external factors can be outside the organization. Comparing both the factors, external factors play a vital role in the governing prices for stock exchanges. So the first factor is the financial position of the company. That is an internal factor. If the company performs better, then only the company will be ranked better in the society, in the market. And based on which the companies, when there is a demand automatically for the price, for the share of that particular company, automatically they can increase the price. Otherwise, the price will be reduced. Demand and supply conditions, as I told you just now. Lending rates, rate of interest, attitudes of the foreign institutional investors. If your company is company is competing with a par excellence in the society, in the market, obviously we can find the Western country MNCs would come here and they would take one part of your share. So that can happen. Otherwise, it doesn't happen. Speculation activities, more risk and more return expectation. Trade cycle or the business cycle we say with 5 stages. That is, we have the prosperity, that is sign of prosperity, that is inflation time. Then we have the falling time is a recession. Then we have the depression, that is deflation stage. Then we have recovery. Then that's what. So these are the 4 different stages of business cycle or trade cycle. Then government policies, under that we have credit policies, monetary policies, taxation policies, fiscal policy, all these things play a vital role. The frequent political agenda or the frequent government's new regulations can bring out a wider change in the price factor for stock exchanges. And finally, the development in the global financial markets. It can be in the form of, today we are having AI, artificial intelligence, which is playing a vital role in stock exchanges. Because we can find there are so many brokers and traders who are just using so much of influence or power to directly affect the price. So this is bias. This actually, this is not entertained by SEBI. That is why today we have robotics coming in. So this artificial intelligence, what happens is they would give the proper advice of what has to be done the next. So if it is actually a broker or a human being, there can be more of prejudices. There can be more of personal biases. So that can be avoided in case of artificial intelligence. So such things are happening today, and that can really create a direct impact on the prices of the stock exchanges. Next, the last but not the least, we are discussing with the defects in stock exchanges. For every action, there is an equal and opposite reaction. Similarly, in stock exchanges, though we have the benefits, there are some backdrops. There are some bottlenecks, some drawbacks in that. And what are they? It can be speculative activities. It can be a gambling situation. Insider trading. Sometimes whatever is happening in the organization, some things can be disclosed to others, can be spied out to others. Messengers will be there who will be trying to take up all your, leak out all your confidentialities, or unknowingly without the official communication, the things can be traded to some other people outside. All these things. Lack of transparency, dominance of financial institutions, lack of professionalism, fake shares. Shares, they need not be the real one. Just putting the brand of that particular company and just selling it. Creating a financial scandals there. Exchange rate payment crisis, that can be disequilibrium also in the exchange. Currencies, frequent fluctuations, Indian value going down, Indian rupee value going down. All this can create a direct impact. Then brokers defaults. The broker, I told you, brokers are human beings. They can have faults. They need not be right always. So that really creates that default can really create a hamper to the stock exchanges too. Then we have the poor liquidity. There is no much of marketability or the transferability. Obviously, the cash balance would be inadequate, due to which it can incur loss or bankruptcy. Then less floating securities. We don't have all the securities that we can't rely that all will be fixed or they can be floating. So they can be frequently, it can fluctuate. Higher volatility, the changes in the market, the frequent changes in the market prices. Then competition of merchant bankers. Day by day, we can find different bankers coming, be it private or public. You can find more of private. We can find that is merchant banking institutions are coming up. So obviously, there is a competition between them on what has to be done the next. Then misinformation. Whatever information is given, it need not be real. Faulty misinterpretations can really happen. Fake information can be given, and due to which the investors can end up in problem. Unethical practices. Obviously, misinformation or misinterpreting things and all, it is one act of unethical practice. Or spying out the information. Or you can say insider trading. All these things are not allowed. That is why today we can find that SEBI plays a vital role by creating more of whistleblowing. What is whistleblowing? Whistleblowing is a situation where whatever, if anybody does any sorts of mistake, SEBI would automatically call for the whistleblower, and whistleblower is one. As a whistleblower, what is happening? If there is a problem, they caution. They give a caution there, precaution. Don't do that. That is why similarly, if anybody does any mistake in the stock market, they just blow the whistle. The whistleblower will blow the whistle and give them alert not to do that and make them aware of the consequences for that. Then we have unofficial unofficial transactions, or we can say curb dealings. That is, if you find that the official timing is from 9 o'clock to 3 o'clock, if after that you are not supposed to do trading. So trading will start from 9 o'clock. 9:30, then after that it stops at 3:30, 3:45 also, 3:35 also you should not trade. It automatically closes. And if there is a sudden increase in the price of something like that, unexpected increase, obviously there is something called circuit breaker. Circuit breaker will be opened, which will be honored by SEBI. So all this is done actually in order to avoid the unofficial trading. And curb dealings are the dealings which are done unofficially after the official hours. So that is illegal. And finally, inadequate financial instruments. We have instruments, but today we are aware of derivatives. Derivatives, how many of you know that it's risky or not? It's risky, but it cannot be handled by a middle class person in India as an individual. It has to be borne only by an institution, because huge amount of money is invested into that. So if you find that whatever instruments are feasible for other countries, it will not be feasible in India, because there are so many factors handling that. It can be the attitude of the population, or it can be the government regulations, or it can be the understanding factor, or it can be the practicality of the situation, or it can be the culture of the population, and so on. So these are the important things that we have been discussing. So today we have discussed about what are stock exchanges, what are its features, what are its functions, economic functions, the services. Then we have seen about we have also seen about the defects in the stock exchanges, right? And the factors governing the price of stock exchange. I hope it is very clear. Thank you. Have a nice day. Bye.